Hi and welcome to the Market Alert for Monday the 28th of March 2022. So the overnight news is Zelensky ready to discuss neutral status in peace deal. That's an important couple of words in this headline and has had an impact on the metals and the energies more so than the stock market, which I'm sure will play catch up when the futures market opens. So I'll just bring this to your attention. Any sign of a peace deal, the metals get hammered, the energy sector gets hammered as well, which is completely irrelevant, but it's the excuse that they have in order to do this, and that's precisely what's happened. But we'll come to that a bit later. Headlines for Friday: stocks, gold and oil surge on weak as yield curve carnage screams recession. We are now in the danger zone, absolutely. But they'll try and keep the markets moving to the upside and crush the metals, despite Russia allowing payments for oil in gold and revaluing, etc. US and G7 allies go after Russia's ability to sell gold, the sanctions evasion lifeline. I don't know how they're going to do this. I really don't know how, but it's gone quiet anyway. That's for sure. They're not talking about this now. It seems to have disappeared off the radar from Friday, but I don't know how they can bring in legislation to do this, but I'm sure they will find a way. Russian central bank starts buying gold. Well, there you go. That's a complete contradiction, isn't it? In order to balance supply and demand in the domestic precious metals market. So if the Russian central bank can buy it, I don't know how the world, other countries of the G7, G20 can stop them from actually selling it. So anyway, inflation disaster is collateral damage from lockdowns. I said this at the outset. I was scorned at, ridiculed, etc. But it's true. I mean, if you shut down the global economy, eventually you're going to end up with hyperinflation. And we've got that. Plus, of course, all of the stimmy checks, which were pumped into the market as well for people. And that is, but that was the idea anyway. That was the end goal of all of this, which I'm not going to go into in this video. I've covered it many times before. News this week is non-farm payroll week this week. On Friday, we've got a bit to go. Obviously, it's Monday morning, and ADP on Wednesday. But today we've got the governor of the BOE, Bailey, speaking today at midday, and then you've got to deal with the rest of the news will be coming out. And gold silver ratio we haven't looked at for a week, but you can see there is sideways and moving up strongly. That's because silver's getting slaughtered at the moment, which I spoke about on Friday, that they would come in and do this, and they're doing it now. You can see they're 77, so we're likely to see this continue to move to the upside, which is fine by me. Allow me to buy more at a cheaper price, so you get on with it, not a problem. It's a way of taking advantage of their generosity of moving the silver price to the downside. It's just becoming cheaper by the day when they do things like this. Okay, let's move on, have a look at the Dow. It's been fairly quiet overnight, which you can see, and over the last few days. Friday, the market moved higher. I thought we were going to break out and try and attack the 78% retracement level, but we didn't manage to do that, and down slightly overnight as we're at 89% from the last retracement, which is there, and showing a bit of weakness despite the fact of those peace talks that we saw there in the main news headline. So Friday, the market moved up in the futures. Again, that same pattern, opened on the cash and moved lower, and then brought back after they'd sold all of the stock that they wanted to sell in the cash market. Same pattern, same day, same thing. That's what we're likely to see today. Again, not necessarily from the open. We might go down first, but then be brought back ready to offload stocks at 2:30 p.m. In the German DAX, a similar picture here. We've got all of this resistance here. We're getting smaller bars. Friday was even quieter than Thursday, and overnight very quiet as well. We'll look at the 30 minutes of the DAX. You can see that we're just below the DP. We did get a bit of a move up with the headline of the peace talks. Again, that's when they started to slam the price of silver and gold. At the moment, the market has pulled back Let's have a quick look. We're down at 78.89. We're at 78 level there. This needs to hold, and then on the upside also we've got a bit of resistance as well. It's from here to here. So we stopped at 38 when the market attempted to move up. We've also got the 200 MA in there and also the 20 bar moving average. So we're clear to actually move down to the 78% retracement at the moment, which we're starting to see prices do this. In the 5-minute chart for Friday, we kicked off with a bit of weakness in the futures market. We were oversold. The market rallied up and then was slammed. We came back to 89% retracement, which you'll see if I just mark this up. There you go, 89%, and then the market was sent down for another retest. You can see this divergence there. We've got the green, we've got demand, and then we saw some buying coming in as well, and the market was then free to move back to the upside. Again, a news item that came out, market shot up and then it shot back down, and once again as it was brought back, market stopped at 89% retracement. Crossover in stochastics, not so much on the volume front. There was a small increase, but it was below the average, and then turning back to green, the market moving back, overbought, market pulling back. We didn't go to oversold because the 200 MA formed a support for this market, which you can see there, and having created that support, once clear, the market was free to move to the upside, where it did become overbought with divergence here, where you can see the fall off, and there you've got a double top retracement before the market then made its way down. We did become oversold here, and the market bounced up just a little, but it struggled with the 20 bar moving average. Parabolic showed red, and also you've got the R1, and then we switched and moved to the downside there. Back towards the 200 MA, and then from here, where you've got the low to the left, to here, you can see the market coming back to 78% in this area as well. And not only that, but when it rallied and then pulled back, you will have another 78% retracement. So the market came back, pulled back, and then went back up to the recent high, where it became overbought. The Dow opened, and then the market moving lower. Now the good news today as well is we're back to normal now, with the Dow opens at 230 for the UK BST, so that's good news. So anyway, the Dow moved lower, so did the German DAX, and then managed to bounce and then follow in the evening all the way through with the Dow. Now overnight we saw again that rally with the news, and since then the market either doesn't believe it or it wants to mark the market down first before moving back to the upside. So that's where we are currently, with the Dow just making its way back there in the 5-minute 2. Let me just extend that automatically. Now we're up to date. There you go. So you can see trying to come back to 89. It's got this support here to the left, and then it'll have a BRN, which will be the red one here. You can see it just there. Let me just make that a bit bolder so that you can actually see it. And there we go. So yeah, that's where the market's currently heading in the German DAX. Bit of weakness there with the futures not coming on stream for another 20 minutes yet though. Right, quick look at the currencies. The GBP pound continues its ascent, as you can see there, going up strongly, not even closing below the 5-bar moving average. Weakness in the pound there on Friday. Again, you can see divergence, oversold. There's your divergence, crossover, and then moving to the upside. Market overbought at this point with some divergence, but just trades sideways at the DP level. And then overnight prices have spiked once more to the upside. Got a bit of divergence there at the moment, but prices holding sideways. In the pound, weakness coming in at the 50% retracement. Got the 62 there, and I marked up all the others to the downside as well, just in case there's a big sell-off in the pound. And in the 30-minute pound, you can see the decline there. We were overbought on Friday, 7 a.m. The market moved lower, became oversold, demand crossover, and divergence. The market then making its way back to 89% of its previous move, which you can see across there. And then moving to the downside over the weekend. Okay, let's have a look at silver and the metals. Silver, you can see there, is being hammered at the moment. I did warn of this on Friday, and the report that's come out that we've been waiting for shows that Bank of America have increased their short position to 1.2 billion ounces. Which is exactly the same as the physical holding that JP Morgan has or had. Hard to say, but any sign of peace talks, they're going to hammer the market. So 89% is on the cards today, and the 50 bar moving average for silver. There's no let up at the moment. If you look at the 30-minute chart, you'll see it's being absolutely monkey hammered to the downside, just as they did on Friday when I spoke about this. But we did have a bit of a bounce, 50% retracement, but they made up for it over the quiet session in Asia and have come in and absolutely pummeled it lower by 50 cents. And it's going lower. I've no doubts about that. It's going certainly down to retest this sort of area here, 24.38. And I wouldn't be surprised if it doesn't do that today, given half the chance, because like I say, it's still being hammered now. Having taken out the 25 level as well. So one of those things, but like I said at the outset, fine by me. I'll just buy some more. It can't go to zero unless they want it to, of course. But otherwise, yeah, I mean, when I say it can't go to zero, don't forget that in March of 2020, crude oil went to minus $40 a barrel on the nearby futures contract. So these things can happen. Incredibly rare. But you never know, do you? You just never know what these banks will do these days in order to make sure that this moves in their favour. But I would expect this again to be hammered. $25 is absolutely crucial, this area, because every time it's reached $25, it's managed to bounce in this area. We had a lot going on in this area over last week. 25, so if it really does break 25, then we're coming down to 24.50, 24.38 level there, where we saw the last demand coming into this market. In Brent, this was moving down when I first looked at it this morning. This is now moving back, which is interesting. So whether things have changed out in Ukraine, Russia, but crude oil starting to move back. That's a surprise, because that was down at the 38% retracement when I last looked at that one. So I'll be keeping an eye on that one. Gold also lower, but nothing like silver, and for the obvious reasons of Russia, etc. and hyperinflation. It's just that silver needs to be hammered to keep that short position intact for Bank of America. That's pure manipulation, whereas there's still manipulation in gold, but not as much. And the dollar moving higher strongly overnight, which isn't helping silver's case. This is the 100 level. That's where the market's going to go to. Whether it does today or not, I don't know. But that's the dollar index has got to go to 100 first before it can show any weakness to move to the downside. Okay, that's it for this one. Quick roundup of where we are with everything. Like I say, metals to be hammered. The stock market might be able to recover a bit. It looks like crude oil's on the march back as well, so it depends on what geopolitical news we get today. Bailey only speaking at 12, and easy relevant anyway in all of this. Okay, that's it. As ever, thanks for watching. See you in the next one.